Hey everyone, welcome to this week's edition of looking at the 2020 presidential campaign's tax returns. We have done 3 of them now. This is number 4. If you haven't seen them yet, we're going to do a review of every tax return for every 2020 presidential candidate. Luckily, most of them have already released their tax returns. I would guess at some point all of them will, so we should have plenty to look at. And of course, if Donald Trump's ever forced to release his tax returns, we will take a good look at that as well. But I personally find these returns very interesting, some more interesting than others. And I know a lot of people want to see what's going on in these people's returns, but it's hard to know because the tax code is super confusing and tax returns are very hard to read unless you know what you're doing and you do it for a living. So we're going to take a look at them and I'll give you as much information as I can. This week we're going to look at Senator Elizabeth Warren. She was one of the more interesting ones I looked at, more similar to Kamala Harris, who we did a few weeks ago, in that she has quite a bit of income coming through, several sources of income, and has a few things going on that make things more interesting than just the W-2, like Cory Booker and Pete Buttigieg were. So a little bit interesting stuff there. I also find Senator Warren's interesting because she's released some very specific tax policy ideas that a lot of people would call radical. So if you're going to release tax policy ideas, I think it's interesting to see what your personal taxes look like so we can see where you're coming from on your perspective. So let's take a look here. This first page, if you haven't looked at a 1040 in a few years, in 2018 this changed. Page 1 here is just their personal information, which we can see here that Senator Warren filed jointly with her husband, Bruce Mann. We can see that they lived in Cambridge, Massachusetts. Of course, they blacked out their full address. And we can also see that they did not have any dependents. And one thing I learned from doing this is that Elizabeth Warren is much older than I thought. She's 69 years old. I actually thought she was much younger than that. So being 69 years old is not surprising that they have no dependents. We can see their occupations. Bruce is a professor, and Elizabeth Warren, of course, is a U.S. Senator. All right, so that's basically all we can get from this page is their basic information. Let's look at the second page with the actual numbers. Okay, so here's the good stuff. We can see on line 1 here that their combined wages, meaning their W-2 income for both Bruce and Elizabeth, were $579,177. We can see that they had interest income of $4,312, which, if you remember from Mayor Pete Buttigieg and Senator Cory Booker, they were significantly smaller. Mayor Pete was $1 of interest income, and Cory Booker, I think, was $76 of interest income. So right off the bat, we can see a big difference there. And this tells us that Senator Warren and her husband have significantly more money in the bank earning interest. At that amount, it certainly wouldn't be surprising if they had $1 million, maybe well more than $1 million sitting in interest earning accounts. So a big difference right off the bat from several of the other candidates in that they have some money sitting there. And as always, that's completely up to each individual how that impacts their thoughts on them. Some people like someone who's made more money and has been there and seen the success, and some people like the people that are quote unquote more like the average American. So just giving you the information. The line 3 here, we can see that they had dividends, $1,349 in dividends, $1,351 of ordinary dividends. So again, they have decent amount in investments. That's not a ton, actually. They don't have a ton in dividends. I would expect that to be higher considering their taxable interest amount, but they have some money in dividends. And we can see on line 6 that they had $320,902 in other income, which we'll see what that was here shortly, bringing their total income to $905,742. All right, so made just under $1 million in 2018. So again, they put themselves firmly in the 1% that everyone likes to talk about. They're well over the 1% of highest income earners in the United States. Their AGI, after accounting for deductions, their itemized deductions of $60,000, it brings their AGI to $846,394. And after accounting for those itemized deductions, it brings it down to $786,266 of taxable income. Okay, so The total amount of income they were taxed on was $786,000. And what the interesting thing is that, as you can see, they had $905,000 in actual income and $786,000 in taxable income. And we'll see where those deductions came from, but it's just always interesting to see what you earned versus what you're actually taxed on. And off of that, we can see their total tax was just over $230,000 in taxes. We can see that they had a credit of just under $14,000, $13,936, and I'll show you what that tax credit was for in a minute, which brought their taxes down to $216,000. Then they had other taxes, which we'll get into, of just under $15,000, $14,833, which brings their total tax paid for the year to $230,965, so just under $231,000 in taxes paid. They had $108,048 withheld on their W-2s, and they had $98,000 in estimated taxes, which made their total payments $206,000, which left them with a tax bill at the time of filing their 2018 return of $24,477. Okay, so they have some high numbers there. They're well past the average American. $905,000 in total income, $786,000 in adjusted gross income, $231,000 in taxes for the year. So they make a lot of money and they pay a lot in taxes. So let's get into some more specifics. All right, on Schedule 1 here, we can see where some of that other income and other deductions came from. Line 12, we can see that they had $323,902 in business income. And we'll get into what that was, but it was mostly for Senator Warren's books, the money she makes on her book. Her husband was also a writer, but as we'll see in a minute, not nearly as prolific or successful apparently as his wife. They had $3,000 in capital losses. What that means is they sold some type of asset, probably stocks, for more than they bought it for, or less than they sold it for less than they bought it for, so they had a loss. And you're allowed to use up to $3,000 of that loss per year to offset your ordinary income. So that's what that $3,000 is. It could also be a carry forward from a prior year. They had deductible self-employment tax. So from Senator Warren's writings, they paid self-employment tax. They're allowed to deduct half of that. And another interesting one here is the SEP, or the 401k, some type of retirement plan within her business, and her business being her writing. She contributed the max $55,000 to that. All right, so this is a very big, some people refer to it as a tax shelter, tax loophole, but it's essentially just putting money into her 401k or an equivalent. And it's a very smart tax move. She maxed that out. She put all $55,000 she could into it, which gives her a full $55,000 deduction. Okay, on Schedule 3 here, we can see, if you remember, I said that they had a tax credit of $13,936. We can see here on line 53 that credit was for residential energy credit. The IRS gives you credits for installing various energy-saving items, and we'll be able to see specifically what that is when we look at Form 5695. All right, here we have Schedule A, which shows their itemized deductions. All right, and this is where you have things like mortgage interest, property taxes, charitable donations. This is kind of the interesting form for a lot of people. And we can see here that they paid state and local taxes of $56,000. We can see that they paid real estate taxes of a whopping $21,380, which tells us that, number one, Massachusetts real estate taxes are very high, and number two, they have a very valuable house. We can see that they paid personal property taxes of $447, which is probably for their auto, their cars. And that combines for $78,068. And this Senator Warren, like Senator Harris, they got hit pretty hard by the tax law changes, where before she would be able to deduct all $78,000 of that. Now she can only deduct $10,000 of that, which we will see on line 7 here. So instead of a $78,000 deduction, she got a $10,000 deduction. So my guess is her and her husband were not thrilled with those tax changes, as a lot of people weren't, at least with that specific part of it. So she lost a lot there. Another interesting thing, line 8 here, would be where their mortgage interest would show. They do not have mortgage interest, which means they own their home or homes outright. No mortgage interest. Line 11, we can see that they made $50,128 in charitable donations. Unfortunately, they don't show us the separate schedule showing what those donations were to. I'd love to see that. Not included here, but they donated a pretty hefty sum. Based on their income of about $1 million, a little under $1 million, roughly 5%. Roughly 5% of their income went to charity, which when you're making close to $1 million, 5% is a good amount of money. So, yep, 50,000 there. And again, as I've said with all of them, that only tells us what their donations to actual IRS-approved charities, 501c3s were. They could certainly be giving more money to people in need, organizations in need, that just aren't official charities. All right, Schedule B here, said they had quite a bit in interest income. This just breaks that down. We can see that Bank of America paid them $12 in interest. Capital One paid them $403 in interest. And the First National Bank of Omaha paid them just under $3,900 in interest. So that's where their $4,300 of interest income comes from. And we can see their $1,351 in dividend income comes from Vanguard Marketing Corporation. I can also see here that their CPA had a typo. He didn't proofread his work, spelled corporation wrong. No big deal. Here's actually another interesting thing. Foreign accounts. We can see here that they did not have any foreign accounts, did not receive any distributions from outside of the U.S. So all of their investments took place within the U.S. Okay, this is Schedule C. This shows us what Senator Warren's business income was. She made $324,687 from all they called as writing. I'm sure that's for her book. The interesting thing here is she claimed no expenses against that. I can tell you that any average person, when they have business income, are going to find some expenses to write off against it. My guess is that they make enough money that it's more hassle to even try to find expenses right off against it, and she just pays taxes on all $324,000 that she made. Okay, so pretty successful with her book writing, apparently, at least in 2018. Made just under $325,000. And this is her husband Bruce's writing. All they call it is writing. Again, I have no idea what Bruce wrote. I should look into that a little more, I guess, but it's not too worth finding out because he made a grand total of $18 from this writing and had expenses of $803 on that. So he actually showed a loss of $785. Almost makes you wonder why they even claimed it here, but maybe he got a 1099 for $18. So Bruce, my advice to you is talk to your wife and see how you can increase those sales. On this page, we have Schedule D, which is the capital gains or losses. And if you remember, I had said they had a $3,000 capital loss they were showing. What we can see here is they actually had no activity in 2018, which does surprise me quite a bit, actually, given their income level. You would think they would have more investments that they're buying and selling throughout the year. But all it likely means is that almost all of that's taking place within their retirement accounts and not in the taxable brokerage account. But what we can see here is that $3,000 loss is actually coming from a carry forward from a prior year loss that they still have $102,000 to take in loss carry forward. And since you're only allowed to take $3,000 per year, that's going to keep going forward for a lot of years unless they have capital gains to offset that. So again, no activity in 2018. That's a very, very large loss that's carried forward from a prior year. Here we have the Form 5695 that I referenced in talking about the credit that they got for qualified energy costs. And this gives us the specifics of it. And we can see that they spent $46,452 on qualified solar electric property costs. So probably solar panels on their house would be my guess. They spent $46,000 on that. The IRS gave them a credit of 30% of that. So they got a tax credit, which means it directly reduced their tax bill by nearly $14,000. So yeah, they put in some type of solar panels. So if you hear her talk about the benefits of solar energy, at least you know that she's trying to live by that and isn't being a hypocrite, I guess, on it. So we know that they spent quite a bit of money putting in solar costs and had a nice tax savings from it. All right, here we can see the specifics on that W-2 income that we saw. We can see who makes what. And we can see this T stands for taxpayer, the S stands for spouse. On their return, Bruce is listed as the taxpayer and Senator Warren is listed as the spouse. So this tells us that Bruce was paid as the president and fellows of Harvard College. Pretty impressive job. He made $402,897 at that job. Senator Warren, as a U.S. Senator, made $176,280. So pretty nice sum of money to be a U.S. Senator. And combined, of course, like we already talked about, they made $579,177 in employment income. Again, on this line, we can see that the dividends came from Vanguard Marketing Corporation, which, again, their CPA misspelled corporation. And this just outlines their total tax withholdings from that. And finally here we have their Massachusetts state return. I'm not going to go through this whole return. It's actually very similar to the federal return. It just carries most of the numbers over. But just to get a quick look at what they paid tax-wise, they owed another paid another $51,330 to the state of Massachusetts. So their combined tax bill between the IRS and the state of Massachusetts was about $281,000 in taxes. So their tax bill was well over what the average American's household income is. So again, up to you on what that means to you and how she relates to the general public, but that's where they are income and tax-wise. So that's it for this one. Senator Warren, I personally find her to be fascinating as a tax nerd. She has a lot of very unique tax policies out there, and maybe at some point I'll do a video breaking down on how exactly those look in real life terms. And she also has a very interesting tax return herself. She has a lot going on. So hopefully you enjoyed this one, get a little bit of a glimpse into Senator Warren, and you can see a little bit of what her personal financial situation looks like. So stay tuned next week. I haven't decided which one we're going to do yet, but we will have a brand new candidate's tax return to look at.